The way we manage, spend, and grow our money has never been more influenced by technology than it is today. A few decades ago, personal finance meant keeping a checkbook, visiting the bank, and waiting weeks for financial statements to arrive in the mail. Today, a few taps on your smartphone give you real-time updates on your bank account, investments, spending, and even your credit score. Technology is no longer just a convenience. It has become the backbone of modern personal finance. So how exactly is tech reshaping personal finance today? Let us take a closer look at the different areas where innovation is changing the way we interact with money. Digital banking and the rise of neobanks. The banking sector has been transformed by digital-first approaches. Traditional banks that once relied on brick-and-mortar branches now offer full mobile experiences. You can open an account, deposit checks, transfer funds, and even apply for loans without ever stepping foot in a branch. Even more disruptive are neobanks, digital-only banks that exist without physical branches at all. Companies like Chime, Monzo, and Revolut have gained millions of users by offering fee-free banking, early access to paychecks, budgeting tools, and higher interest rates on savings accounts. For many, the convenience and transparency of neobanks make them more attractive than traditional banks. Digital banking also plays a big role in financial inclusion. People who may not have had access to reliable banking services before can now participate in the financial system with just a smartphone and an internet connection. This has allowed millions worldwide to save, borrow, and send money in ways they never could before. Fintech apps and smarter money management. One of the most visible changes in personal finance is the explosion of fintech apps. These apps have transformed how people budget, spend, and save. Budgeting apps like Mint, Inab, You Need a Budget, and PocketGuard give users detailed insights into their spending habits. They categorize expenses automatically, set saving goals, and provide real-time tracking so you always know where your money is going. What once required a notebook or spreadsheet is now automated, accurate, and easy to use. Fintech apps have also made investing more accessible than ever before. Platforms like Robinhood, Acorns, and eToro allow users to invest in stocks, ETFs, and even cryptocurrencies with just a few dollars. Fractional shares mean you don't need thousands to start. Just a small amount can make you part of the market. Another major innovation is peer-to-peer payments. Apps like Venmo, PayPal, and Cash App have changed the way people send and receive money. Splitting dinner bills, paying rent to roommates, or sending money to family abroad can be done instantly and often without high fees. These services have made cashless living not just possible, but preferable for many people. Artificial intelligence and automation. Artificial intelligence is quietly but powerfully reshaping how we handle money. AI-powered tools are embedded into almost every financial service we use today. Robo-Advisors like Betterment and Wealthfront offer automated investment strategies. You simply input your goals, whether it's retirement, saving for a house, or building wealth, and the platform creates and manages a portfolio for you. These systems continuously monitor markets and rebalance portfolios automatically, often at lower costs than human advisors. AI is also improving financial security. Banks now use AI-driven algorithms to detect unusual activity in accounts and flag fraudulent transactions within seconds. This has dramatically reduced the risk of identity theft and unauthorized spending. Beyond security and investments, AI also helps with personal budgeting and financial coaching. Chatbots and virtual assistants can analyze spending patterns, remind you of upcoming bills, and suggest ways to cut costs. In other words, everyone can now have a digital financial advisor right in their pocket. The role of cryptocurrencies and blockchain. Cryptocurrencies have been one of the most disruptive financial innovations of the past decade. While they remain controversial, their impact on personal finance is undeniable. Bitcoin, Ethereum, and other digital currencies offer a decentralized alternative to traditional money. Unlike banks or governments, cryptocurrencies run on blockchain technology, a transparent and secure digital ledger. This means you can send money anywhere in the world quickly, often at lower costs than traditional methods. For people living in countries with unstable currencies or limited access to banks, cryptocurrencies offer a way to preserve wealth and make international payments. Stablecoins, which are cryptocurrencies pegged to real-world assets like the US dollar, make this even more practical by reducing volatility. The rise of decentralized finance, or DeFi, is also reshaping how people borrow, lend, and invest. Through blockchain-based platforms, users can earn interest on their crypto holdings, take out loans without traditional banks, and trade assets in a decentralized marketplace. While crypto is still evolving, its influence on personal finance is clear. It has created new opportunities, new risks, and a whole new way of thinking about money. The power of data and personalization. Another way technology is reshaping finance is through data. Every transaction, every purchase, and every payment generates data that can be analyzed to create a clearer picture of financial behavior. Financial institutions and fintech apps use this data to offer personalized insights and services. For example, some apps automatically suggest saving goals based on your spending patterns. Others help you avoid overdraft fees by predicting when your balance might drop too low. Personalized credit scoring is also emerging. Instead of just looking at your past borrowing history, some companies are experimenting with alternative data like utility payments, rent history, and even online activity to assess creditworthiness. This could open doors for people who traditionally struggle with access to credit. Risks and challenges of tech and finance. While technology offers incredible opportunities, it also introduces new risks. Data privacy is one of the biggest concerns. With so much financial information stored digitally, the potential for hacks or misuse is high. Another challenge is over-reliance on automation. While robo-advisors and budgeting apps are helpful, they may encourage people to stop thinking critically about their financial decisions. Automation makes money management easier, but it doesn't eliminate the need for financial literacy. There is also the issue of scams. The digital world has opened the door to sophisticated phishing attempts, fraudulent investment schemes, and fake apps. Consumers need to be more cautious than ever about where they share their information and how they invest their money. Finally, the pace of technological change can leave some people behind. Older generations, or those without reliable internet access, may struggle to adapt, creating a digital divide in financial management. The future of personal finance. Looking ahead, the relationship between technology and personal finance will only grow stronger. We're already seeing experiments with digital currencies issued by central banks, advanced biometric security systems, and more integration between AI and everyday financial tools. In the near future, it's likely that personal finance will become even more seamless and automated. Imagine having all of your accounts, banking, investments, budgeting, and even taxes managed by a single AI system that learns from your habits and optimizes your money for you. At the same time, regulations and security measures will need to evolve to protect consumers. Striking the right balance between. Technology has reshaped personal finance in almost every way possible. From digital banking and fintech apps to AI-driven automation and cryptocurrencies, the way we manage money today is faster, smarter, and more accessible than ever before. But with these opportunities come challenges, privacy concerns, risks of fraud, and the need for financial literacy in an increasingly automated world. One thing is certain: technology will continue to play a central role in how we earn, save, invest, and spend. The tools available today are just the beginning, and those who learn how to harness them will have a clear advantage in securing their financial future. So the real question is, how are you using technology to take control of your money? The tools are already here. It's up to you to make the most of them.